This is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, September 11th, 2024. It's 2:51 p.m. Eastern Time. Just wanted to fire one off. This is just for active traders. If you're a long-term swing trend trader, not much here for you, but I'm just going to go over. This is what I call hard reversal for a day trade. I fired these off to you 15, 20 minutes ago. We just got here to that 19,124 target. There was a breakout today. Tap, 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 boom. That's what happens when you have a lot of tests of one level, and typically the more tests, the more powerful it is. Yeah, not to mention that little stop clearing drop this morning, which took us right back down there. But a couple things. Number one, again, hard reversal, intraday position. Why? Because if you look at the move, the scope of the move, it's pretty impressive. If you look at today, and probably cap before we get a pullback. So we had a open right here, popped up. Let's see, 9:30. There's the opening line right here. That's yesterday's close. Opened here, it popped up a little, and from the high, the post opening, it was a small pop. Turned around, dropped 1.7%, and then from there, turned around, rocked up 3.35. Can we go up more? Yeah. Are we likely to go up more? Very unlikely before a pullback. And, you can draw a trend line here. I think the short was to be made at resistance. I just showed you, but you get a little uptrend line going right here. We'll break that and probably go down. You get divergence. And, again, book profits, maybe just sit back, recycle back in if you don't like shorting, if you took it. But either way, you can see also that trend line I gave you there on QQQ. When I got the post out to you, we had the 465.07 resistance there, and the downtrend line just above it. Like I said, that was a target range. They came in together with a minor resistance just above it. And we're there now. I'm doing this live, so we'll see what happens by the end of the video. We should see the reversal come. And then, there's more. So that's QQQ and NQ both hitting those targets. But of course, you have ES at that 55.37. Remember, these are levels. These go back to, was it last week? Where was the target I got out to? Or the charts this morning. NQ, there's that 19,124 arrow break, denoting a reaction there. And then I could have sworn there was one more I got out to you. Swing trade ideas, targets. Would have been yesterday. Here it is. Okay, yep, right here. So this goes back to the 9th, 2 days ago. We had punched under there, regained that support, and this is NQ right here. So we've got the break at 18,820. Oh, there it is. Okay. So I tweaked it. As I do these videos, I usually show you or I'll highlight after I've moved it. So that line originally was at 19,091. And the next day, that's September 10th. Yesterday I revised it. You can see the 19,124.32 right there. And that's what we just hit. So expect a reaction here. Game of pullback. Got some momentum right now. Or not. But if so, pull back, get a quick pullback trade, and then recycle back in and probably get one more thrust up to hit that trend line, which is the maximum near-term target. ES, again, 50, what was ES at right now? It just hit this. This is what makes it all the better. Tweaked this trend line right here recently to 55.37. Boom, hit. Got some divergence there as well. We'll see if that plays out. But again, we're coming off a bigger divergent low more recently. Either way, 55.37, get a reaction, go pull back and cycle back in. And then if you're trading, yes, and then that next target up there. And remember, the downtrend line would be your max target right there. So more of a, three target. This downtrend line is going to come in. If it's hit anytime soon, it'll come in above this 55.9150 target right there. But I just want to point out, again, as we do this, as I'm doing the video, we're right at those resistance levels, both on NQ, QQQ at the downtrend line, and ES at that 55.37, which again is right here. Nope, that's NQ again. Where did I go? ES. Okay, ES. There it is. 55.37 right there. There's zero break. Okay, so that's from the other day. All right, so far so good. We'll see if it continues to pan out. And remember, this is just one thing. You're looking at these charts and wondering, how did these, where did this bounce come out of? It is a couple things, and this is why I'm doing the video. Again, I can't overestimate the importance of NVIDIA. You write it off if you want. It's not time to write it off yet. We've made plenty of shorts, and we've been just navigating this. Like, again, if you're an investor in NVIDIA, you've been just had your head ripped off and screwed on backwards over the last few months. You went up, you were doing great, and you went down, you lost in a matter of just a few weeks there. So you lost 30%, which we gained short. Then we turned around, went long, you went up. And so investors don't know what to do. And this is not healthy for the stock. Corrections are. These are healthy. Corrections along the way, new highs. When you start making this, and remember, what you're making here is a series of, so far, lower highs, 1, 2, that's lower, 3. And so far, lower lows, if we do, as I expect, remain below this high and then break this trend line and go down, and then that's all the makings of a new downtrend. So that differentiates an uptrend. And now, look, hey, maybe there's some big things coming in the market in NVIDIA, and this is just high-level consolidation or just consolidation like it was here. Sometimes stocks consolidate, but as I often say, from these periods of consolidation, these sideways trading ranges, whichever way you break out is usually the next direction, the next tradable trend. And so again, to break to the downside, I cannot emphasize that much. And before we even hit this level right here, that was my target, 96.23, again on the longer term charts and the daily and the 60-minute charts too. So that's pretty much what NVIDIA is doing. But again, this is the cause, very largely, not exclusively, very largely the bounce, and of course Broadcom too, which everybody wrote off after earnings, but had a perfect kiss. So again, you got to sometimes just trade mechanically, buy when you don't want to buy if the charts say buy it, or cover shorts, so that was an objective long entry or short exit with a stop somewhat below, especially on a solid daily close below. But as of now, make no mistake about it, this has set the tone for the semis. These two leading semiconductor stocks exploding off support once again. And that's explode. I don't mean to sound dramatic. They're big moves. 16% in 4 days is a big, 3 days actually is a big move. But it's run of the mill. If you look at these are the kind of swings that these stocks have. Again, it's like I use the example of natural gas or Bitcoin. Those things go up 10, 15% in a day, and then they do it again, and then they do it again the next day sometimes. And so, if this was the S&P 500 going up 16% 3 days, I'd say, wow, that would be a jaw-dropping rally. This is just kind of par for the course. And when you look at the bigger picture, you stand aside, you see 1, 2, 3 lower highs, and a series of so far, you count it right here from the top, 1, 2, and if we now reverse before this high, then that's when when I talk about the masses finally recognizing something that I see in the charts before it happens, it's that point of recognition sometimes comes relatively quick collectively, but quite often it's a gradual thing. Some people are a little slower to others to realize they keep buying dips and that it's not working. Some might have realized it here, after that, made a new lows and threw away their shares. And but most will most likely realize it at this point. It should become obvious to most that we're in a downtrend. And so that was it. And there's that example I gave you earlier in the video. If you wanted to hold out and set a stop, I give you the target of a backfill of the gap plus that downtrend line, and we popped above it. Wouldn't surprise me to see us close the day below it. I just hard shorted the market, as I said before I started this video, because we hit those targets, and I'm going to cover a couple other things, and this one will probably come right down with it. So where I was bullish the other day, making a case to go long, there's also some resistance there. I would not be surprised. Here's the downtrend line as it shows better on the 60-minute chart. And we hit that 156.93 resistance level. I've had that on the chart since August 2nd. over a month ago, and we just hit it, and bet you we closed today back down here. So that would be a fade. If you want a fade trade, if you want, of about a couple percent. Better fish to fry right now. The dip buyers are giddy because the semis are buying these dips, and that's usually how it starts out in the beginning. So better fish to fry. And when you short the NQs, it's broad based, or QQQ. You don't have to worry about any one, because let's just say you short Broadcom and all the other semis, including stocks and all that, go down in NVIDIA. And this is going to be your dumb luck that this is the one stock that just keeps going up. So that's where there's safety in numbers when you use a semiconductor sector ETF like this. And look, there may be, and look, I gave you, my plan, a little pullback trade, one more thrust up. And you can see stocks hasn't yet hit the downtrend line. So we could see overall in the semi sector another 2 points, roughly almost 3%, 2.8 from where we're at right now, or from today's highs. Again, if and when we get there. That's when I say if and when. We're not going to go straight up. Straight up is going to be a higher number. There's a downward sloping trend line, so it comes in at lower levels. So if we pull back first, then have a thrust up, and we hit it here, let's say that's going to be on Tuesday the 17th next week. This is a 60-minute chart. So there's the range, about another 2% upside to pretty good resistance on stocks. So if you're looking to short or reshort the semis, if you covered recently, as I stated on that trend line where we're likely to bounce, that's a good re-entry point right there. Daily chart, there's a trend line. There's the same downtrend line right here. You can see it nice and clear on the daily chart. And likewise, if you are bullish and you bought that pull back to the trend line, or that one break of that's going to be bullish. A break of that previous high will certainly be bullish, because it's going to start setting calling into question the near-term downtrend. And then, but the big level right here, that's where we should contain. So that's kind of your maximum bounce potential target. I don't think we're going to get there, guys. I really don't. The financials broke down now. Let me just finish it, make it a quick video, get it out to you. So here is technical analysis using, watching different, the things that are most important. Some days I'm talking about treasuries, and the next day I'm talking about something else. Right now, my focus has been on the tech sector. First, it was mostly the semis and the NASDAQ 100 and the market-leading Mag 7s, and mainly NVIDIA and some others there. Then I broadened that out more recently to financials and the S&P 500. And now you can see what happened today. So this is a boom, hit a first level, bounce. Hit a second target, bounce. Where did we bounce to? Right back to T1. And that's what the bounce targets were, either minimum right there. And if they want to carry it a little higher, wouldn't surprise me at all. A lot of dip buyers are going to be foaming at the mouth to buy JP Morgan and some of these other companies, how much cheaper than they were just a few days ago. So you can buy JP Morgan today, or at today's lows when we hit, today's low when we hit that level on the financials, that target. You could buy it over 10% cheaper than you could just a week or two ago, right? So, the old saying, we used to joke around when I was a stockbroker. Wouldn't say this to clients, just the guys in the back room. Hey, if you loved it if you liked it at 225, you got to love it at 200, right? That's the joke, right? If a stock goes down and you liked it there, how can you not love it there? But and they do, and that's support. That was a target. Remember, these are levels. Go back to the video a couple weeks ago. 203.47 was my third target. That's been hit. We hit it yesterday. They stepped in, bought it, hit it again today, or near term. Near term oversold. But this is a lot of technical damage. That's a pretty powerful sell signal, and it could be the end of it. But there was a pretty impulsive drop, and it was one and done, right? But see, when you start getting this, and then this again, it starts to rattle the nerves of a lot of mom and pops investors. A lot of some that held through that and buried their head in the sand, and then just looked a few days later and they were back above water. They were okay, but to see it happen again and again, this is the nature of the VIX starting to wake up, and volatility perks up, and that usually it happens around a market top or you see big moves, coming off a market bottom. Yeah, I'll just throw this out there in the comment section. In the last post, I saw somebody ask, said, Randy, can you, let me know when TLT triggers a sell signal instead of doing a video. I don't always catch those, and I can't always, but I did. I replied right away. We just broke down, and so I shared this chart. Well, it was an annotated screenshot. This is a live chart. We broke down. It's not a screaming, clear, you have to squint to see it. It's a little, but we're below there. And as I said in that reply, a breakdown is a breakdown unless it fails. So there was a breakdown candle. That's the one I got out and when I screenshotted it. And you can see we're still below there. So it's a breakdown. It's not impulsive selling or anything like that, but it is a breakdown. So my reply was, best thing in my opinion, starter position. That's what I did today. Took a starter in the in ZB, the 30-year Treasury bond short. And then if you see either a clear rejection off the back test or a break of this 90, it's about 99.96 is the next support level, kind of the BOD level. That should seal the deal. And at that point, you'll start to most likely see selling start to pick up, and there's your first target. First target's not very aggressive, but remember, you take a bigger than usual position size here, or you don't trade it. It's not one of my favorite trades, but it's also a diversification trade if you look at it that way. There's times that lately Treasury's been moving in line with the market, and times they're moving the other direction. Mostly it's been in the other direction. Get a flight to safety bid lately. Remember, that's what, this big leg up here was that big drop that we had game down to the August 5th lows. So it's not mere coincidence that we had that huge surge up there. And right when we hit our target, covered all our shorts on August 5th at the lows. When the stock market bottomed, that's when Treasuries peaked back then. But then they since made a new high. So this is, there's a lot of variables there. We know we're going to get a rate cut next week. I think it's next week. We're going to, but there's a lot of cross currents. So again, we can sit here. I could talk the fundamentals on Treasury all day long, but like I said, it's like any trade. Take it, don't take it. It's simple. There's a target's maximum target at this point in time. Right now, it's this uptrend line. I'm sorry. And I know this is a busy chart. I haven't cleaned it up, but the arrow, all these levels here are all potential targets. So I just wanted to get that one out to you there as well. And I thought we'd see the reversal by now. I mean, we're right there. We're just a hair, the slightest hair below that trend line, the way I've had it drawn here. And it's still at that, that's where we were when I got the post out to you. It's probably been over half an hour now. These are 60-minute candles, 465 in change, and we're right there. So we're at resistance, no rejection yet. 1 minute trend line's been breached. It's not a super well defined. That's how I was pulling it around. We can do that. Yeah, that's a better fit right there. More reactions, a breakdown and a back test, and then a rollover. 5 minute. It's going to be the same trend line. I'm just playing around with it here. And SPY. Got the same thing right there. Very steep near-term uptrend line. And so I'll wrap the video up. And this should be a quick one since it's short. It should process quicker on YouTube. Remember, if you're new to the site, I always tell this to subscribers, but a lot of these videos, there's time-sensitive trade ideas and analysis in there. And so what I do is I upload them to YouTube right away. I've got zippy fast internet and fast computer. It'll process on my end fast, get it up there. But then YouTube has to process on their servers. I have no control over that. But the initial rendering is in standard definition. That's 360p. So if the videos look blurry, click that little setting icon on the bottom right. You can, if you don't see the 720p HD quality, then just refresh the page and try that. And after a minute or two, it'll be in 720p. But you have to usually refresh the page. It's not just gonna. Eventually it'll pop up under the settings icon, but it's gonna pop up quicker if you do a page refresh. And 720p is the maximum I do. I've done these videos. There's no visible difference that I can notice on 720p or the 1080. 1080 just takes longer for my computer to process it. and longer to get it uploaded. It's like, from what if I understand right, I think it's 4 times the density of our data bandwidth, pixel count going from 720 to 1080. If I'm not mistaken, you techies will know that. Anyways, it takes longer, and it takes longer to YouTube to do them. That's the reason people have asked before why I don't do them in 1080. But again, they look crystal clear to me on my phone, and monitor in 720p just goes up faster to YouTube and comes out to you faster. All right, I'll wrap it up here. We're still flirting with those levels. I'll give the market points for that. I prefer the reversals when they're hard and fast because it doesn't let the longs out and the shorts in. Those are usually the best turns. And right now, we're at resistance. All right, let me stop it here. And again, if we don't get a pullback, you know where the next targets are. And let me do this too, if you happen to, because this is sometimes the way I have to look at it. If the shorts don't play out, or a quick pullback trade here, we're talking, and it doesn't mean that this is where we have to end, but my next target is of only about another 1.5% to, again, depending on when we get there. We're not getting there today. What's possible? We're only up 1.65, even though it's been a huge turnaround from the low to high. So to do it today, it's possible, a 3% day. No, it's another 2.25 up there. I'm trying to grab from where we're at right now. To get to the trend line, that'd be a pretty big stretch. All right, you know where I think we're going. Pull back, zigzag, get back in. Before I wrap up, I'm still talking, aren't I? It's 21 minutes now. Let me just check the economic calendar. I think we have something tomorrow. Oh yeah, we do. Jobless claims and PPI. All right, guys, let me just say this. I would prefer to go home short today. I know people probably ask. 2 reasons. Number one, the upside, although those are still very likely, especially if this number, remember, jobless claims, all these numbers, you get these little aberrations, and PPI, that could certainly cause a pop to the upside. But based on overall everything that's happened, including the financials breaking down, where the technical posture of that, of the big caps and everything else, the way I'm viewing this is I have to go home long. I have about roughly 2% upside, right? And again, there's no rule or hard set, formula that says we can't blast through there tomorrow. But that's an even better resistance level where reaction's likely. And so, I could, get out of shorts there. If I go home short and I go down underwater 2%, we'll get a pullback, and then I can decide whether I want to cover or not. However, the potential for a gap down, a negative surprise based on the way things have been flowing lately, meaning the reaction to these economic reports, the general trend that they've been heading in, things are getting worse. We've gone from no recession to soft landing to now again talk about a hard landing. That happening, the uninversion of the yield curve, blah, 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 and go on and on. So that's been the trend. Financials have just broken down. Semis bounced, but they bounced where I expected and about as far as I expected. And so that's my view right now. And I'll let you know, this video is going to get to you right by the close. You have my thoughts there. I will not go home too heavy or too long, too heavy short, or gosh, I'll have to see how we close today. I'll throw something else. If anything else doesn't happen, I'm leaning towards a mild short position going home. If that changes, because I'm going to keep looking. I stop this video and I look at everything else. I'm looking at different sectors, and then I'll decide whether I change that. But I'm going to I reversed here. I am short now. A good enough position to game a pullback into the close. If nothing else, you'll probably get some nervousness with those numbers coming out tomorrow. So I plan to cover, it's pretty much what I call a day trade size position. That's an oversized position. I can manage them in front of the computer, and then I take that down at night to a swing position. Even though I trade futures, and there's really no clock in futures. I trade around the clock. So if you're a QQQ trader, I always say this is why one reason I like futures. I much greatly prefer the tax advantages, but the fact they trade around the clock. So if you are a QQQ trader tonight, and unless you go flat, you're going to go long or short. Well, you are subject to, if you're short, easily a 2% gap up, if not more. Could easily see that. Likewise, you could be subject to a 2 or 3% gap down. That to me, and the risks are skewed a little this way. That's why I just shared my thoughts about going home short, but they're not clearly skewed that way. They're almost bilateral. And again, in a big trend, I don't want to get left out on the move. So it's a kind of default. If I have to flip a coin, that coin goes to the bear side. If I have to flip a coin, and so QQQ traders, you have no way of mitigating that risk. You can buy options, but then that's expensive and it offsets any gains. That's not, I don't believe in direct hedges. It's a waste of money. The only person making money on that's your broker. Whereas futures, click over to NQ, and then I'll stop. Futures, you can set a stop that is, these are liquid at 3 in the morning. You have liquidity in the NQs and ES or whatever time you want. And so you set your stop loss. I like to hide mine. Interactive Brokers lets you hide your orders so they don't see it. If the market's a little thin at night, they can run up or down and blow out your stops. And so that way I don't have to wake up to a 3% gap against my position if I'm short, or a 3% gap down if I'm long. Where on QQQ that you have no choice. Because you have two choices on stop losses. You have a stop loss order, good to cancel, that will only fill in regular session hours. And you have a stop limit order. You can set those in after hours session, but a stop limit order, and that's the only type allowed in after hours and pre-market trading, says sell me at, let's say 460. Sell me out of stop limit at 460. Well, if QQQ gaps down to 459 and 99 cents, guess what happens? Your order does not get filled. It sits there unfilled because your order says fill me at 460. If it hits 460, that's whatever your trigger. If it triggers 460, fill me at 460 or better. You can get filled at a better price, but never worse on a limit order. And so you go down to 459 and 99 cents, and it never looks back. And you wake up, and here's where the futures plunged overnight, and all of a sudden you're wondering why you're sitting there with a 5% loss on your QQQ position when you had a 1% stop set to fill an after-hours session, or even in the regular session. That's the problem with stop limit orders. They can get bypassed. A stop loss order will be filled, but when the market opens, it's going to fill you down here, even if you set a stop loss order at 460, good to cancel. And we gap down all the way down here on QQQ, they don't fill you there because nobody got filled at that point. It's a gap. You get in line. Stop loss orders are converted to market orders once the stop price is triggered, and therefore you get in line with everybody else at the open. They call those order imbalances, and that's why you get those big moves sometimes on opening trades at 9:30. All right, I'm going to stop it here. This has been Randy Finney with Right Side of the Chart. Have a great day.